Good evening, Michael. This is Ryan with TrendLizard.com. Thanks for sending me the email. You had requested some analysis, Elliott Wave Analysis of 3 stocks. We're going to take a look at Designer Brands, which is DBI, Consolidated Edison, ticker ED, and then close it up with Dollar General, ticker DG, 3 of which I have not looked at before, but I have done so now. So I've got the charts here, and we're going to get started with DBI Designer Brands. It was incepted back in 2005, a little bit up, down to its all-time low. Off of that low in 2009 gave us a very large, seemingly trendy up leg to set a new all-time high, basically moving from a couple dollars up to around 38. Once it hit its head there in 2013, it embarked on a very large pullback that retraced the vast majority of that move over the course of about 6 years, 6 or 7 years to the downside. Once it revisited that low or got close to it in 2009, reversed up to the upside off of the 2020 low and has been on the recovery since then. So looking at this here, like I said, looked like a trendy 5-wave move. Probably the most bullish thing that's going on for DBI is the fact that this large pullback that retraced most of that up leg looks like a very clear ABC move. Now, this move is obviously very large, so large that it's more than just a correction of this trendy 5-wave move here. So that to me suggests that this is probably the end of a much larger 5-wave pattern. We just didn't get to see it because the IPO was in 2005, so we didn't see what came before that, but that has to be the implication to us because, again, obviously this is more than just a correction of this up leg here. It must be a correction of a larger move. So the question we are asking then is, has this pullback completed? Is it an ABC move that is over and now the uptrend has resumed? Or is this the first leg of a larger counter trend pullback? So that is the question on the table. We're going to go ahead and zoom in and see if we can answer it. First up, we are taking a closer look at the pullback off of that 2013 high, and this puts into a little more detail the reason why we think it is an ABC move. I don't see any other way to label this as a trendy move. It very much looks like an ABC move. The initial down leg itself looks like an ABC move, then a large B wave, and then it looks like a 1, 2, 3, 4 with extended 5th wave for wave C. So this counts out nicely as an ABC pullback. Again, once it completed in 2020, it has been on the mend since then and shows trendy potential, but somehow after even a couple years, there is still work to do to prove that this is in fact a trendy move. So let's go ahead and zoom in on the recovery effort. Now, it's certainly possible that this is a trendy move. We can take a closer look here. It looks like a first wave, a big choppy, kind of funky second wave, but still very clearly counter trend movement to the downside for wave 2, and then a clean 5-wave advance for wave 3, and then everything we've seen off of that 2021 high, very time consuming, very choppy, but still ultimately very much looks like a counter trend move to the downside. So as constructed currently, very much could be a first, a second, a third, and a 4th wave, with a 5th wave up. Now, if that's the case, if we're getting a 5-wave move to the upside here, that would be a bullish sign that this ABC pullback is over, and this is the start of a larger up move that's on its way to new highs. So that's kind of the potential there. For this potential to be realized, DBI has to stay above 10 at all times. Obviously, that level is not super close, but on this larger time frame, that is the key level to keep in mind. Has to stay above it to maintain the potential that this is the resumption of the overall uptrend. So now we're just going to zoom in on this action off the 2021 high, and it's that 4th wave that we're looking at, what we believe to be a 4th wave, and it's a move that could potentially be over. If we look at what's happened off of the 2021 high, we have what looks like a 3-wave move to the downside. This is the low for that pullback. It was above 10, and off of that low, it has given us some constructive movement to the upside that looks potential. Let's go ahead and zoom in on this action here off of the 2022 low. And this is what I'm talking about. If you look at the recovery off of the low for the pullback, we have what looks like a 5-wave move to the upside, a 3-wave move to the downside, and then strength off of July's low to a new high. So this is all bullish action. Let me zoom back out here. This has the potential to be the 5th wave up to new highs. If we zoom back in order for it to realize that potential, it needs to stay above 14. So that's kind of what it boils down to. If it stays above 14, this will have the potential to continue up to new highs in a 5th wave up. If it moves below 14, that's going to be a warning that this entire pullback is not yet over. That brings 10 back into play. So I think you can be bullish on this guy as long as it's trading above 14. As long as it is, it can look like a move that's going to move to a new high In a wave 5 up, the expectation at that point would be that we've completed a 5-wave move to the upside, and then a more substantial correction of this move would begin to correct this 5-wave advance before the next 5-wave advance begins. But I think on any shorter time frame, you need to be bullish as long as it's trading above 14. As long as it's doing that, the expectation would be to get a move to a new high above this high back here around 20 to give us that 5th wave up. Should be a 5-wave move before it completes. At that point, you get that larger correction. Next up, let's go ahead and take a look at Edison, stock that's been around forever. We have data dating back to 1980. This shows all of that action here. Obviously, it's been in a very large uptrend over time with the dividends taken into account and the splits and all that other stuff. It's basically moved on this time frame at least from about 60 cents over $100. Now, this is a pretty difficult chart just to look at and be able to label because at least on this time frame, the pullbacks don't make a huge dent. It makes it fairly difficult to understand exactly where certain wave patterns begin and other wave patterns end. So I took a different approach here. This chart here shows a logarithmic scale where every box is a similar percentage point. So I changed that a little bit and made it a linear scale where every box is a similar point amount. And by doing that, it changes that chart to look something like this, just to try to find something that makes sense and to identify where the wave patterns begin. So basically, we have this action here, which is difficult to label. We have one of the larger pullbacks that it's been under, and basically the pullback that happened in the late 90s. So off of this low here is where things start to make a little more sense, at least in my brain. From this point here, I can start to see trendy upside patterns. First wave, second wave, a very well subdivided third wave, a fourth wave pullback, that 2020 move, and then what appears to be a 5th wave up. So on this time frame, I can see the potential that it's getting closer to a more important high. Now, in reality, it's not like we can just forget this action here. So I think probably what we're looking at, I believe I lost my chart here, is that this is probably some type of first wave and second wave. So what we'd really be looking at here to the upside is an extended third wave advance. So when this up move completes here, I think what we would be looking for is a larger 4th wave pullback, as is the trend is up. But I think on a longer term time frame, you have to understand that kind of framework to understand that when this move up off of the 2020 low completes, that's what you're looking at. You're looking at the start of a much larger 4th wave correction that would be tasked with correcting a substantial up leg. So let us go ahead and zoom in now. Basically, we're going to take a look at this action off of the 2020 low with the goal of determining when this will become a completed 5-wave move, because that's when that larger pullback will begin. So this is what we're looking at on that time frame here. So this is the low in 2020. You have a very sharp start to the move and then just petered out from there, had this choppy action here. At the end of the day, it was counter trend movement. At the end of the day, it only retraced a bit more than 61.8%. At the end of the day, it fits as a second wave. So basically, a second wave low in early 2021, giving us a larger third wave advance that to me still appears to be in play. So again, the goal off of the 2020 low is to be able to identify a completed 5-wave move. Once it does, we will be looking at a much more substantial pullback. Until that happens, higher prices will be expected. So again, first, second wave, still in a larger third wave, then you'd get a 4th and a 5th to complete that move. So currently, it appears it's in that third wave with a first, a second wave, a nice third wave, and then what looks like a 4th wave move that is not yet complete. Let's go ahead and zoom in and just look at this action here, the 2022 action, which looks like that 4th wave. The reason I don't think it's complete, first, because you look at the second wave here of wave 3, looks like a pretty substantial multi-month move. You would think something similar would happen for wave 4 here to offset that. The other reason is when we look at the down leg in June or late May to early June, looks more like a trendy 5-wave move. This does not look like a completed correction. It looks like the first leg of a larger correction because, as we know, corrections should ultimately take a 3-wave form. In most cases, very rarely is it just one sharp down leg. So the thinking is this would be wave A. This 3-wave move to the upside would be wave B, and then we'd get a C wave down back towards June's low, with a move below 93 confirming that we're getting a larger fourth wave correction. If somehow ED stays above this level and continues higher, very possible then that the uptrend has already resumed. It's just not the best fit per, again, the size. Looks like it'd make more sense for this to become a multi-month move instead of just a few week move. And then also it makes more sense of this sharp action to the downside. So stepping back out, just to put that all into perspective, we're looking for the completion of a 5-wave move. We appear to be in the subdivisions of a larger third wave, currently in the fourth wave of that move. So looking for a move back towards June's low before price turns higher again to complete wave 3. And then you go from there looking for that 5-wave move to complete. So that is what I'm looking at Con Edison. Let us move now to DG, Dollar General. Last one we're going to take a look at here. This guy was incepted in 2009, and it's a similar case where it just keeps on trucking to the upside, makes it very difficult to label because the pullbacks aren't huge, and so there's a little bit of subdividing and all that fun stuff that we have to do. So here's my best effort at that. One of the cleanest patterns that I can see here is this move here. It's a 5-wave move, but there's overlap. That makes it a diagonal of some type, and the only way it makes sense to me is to fit as a leading diagonal. And from that, we kind of came up with this labeling here for second wave, and then basically all one large third wave here with a leading diagonal for wave 1, a second wave pullback, and then you have this subdivision here for wave 3, wave 4 to the downside, completed wave 3, and then a larger fourth wave correction. So let's go ahead and zoom in on more approximate action here. Again, not super easy to determine where this is. I can act like this is the only way to label it. It's not. Certainly there's other ways to label it. It's just been such a sharp move. It's very difficult to say for sure. What we can say with confidence is that what we're seeing to the downside is counter trend price action, and what we're seeing to the upside is trendy price action. So it becomes one of those deals like until it does something wrong, you got to kind of expect it to continue. And I think that's where trend following really adds its value to the Elliott Wave approach. We're not sitting here trying to pick off highs. We're trying to determine the direction of the trend and then stick with that trend until something indicates that it's changed. And that's a good example here with Dollar General. Counter trend price action, trendy price action to the upside, all within an uptrend. Until something happens that says otherwise, I think you have to expect higher prices. Now, if this labeling is correct, we're talking about a 5th wave up starting off of this 2022 low here. If you look at other up legs, you see what it tends to be multi-year moves on this time frame. So if we get a 5th wave that's on the same time frame as this 3rd wave and this 1st wave, it makes sense to expect significantly higher prices. So I think as long as we're getting trendy upside action, counter trend downside action, you have to be bullish. Unfortunately, the closest level we can have at this time that says a problem is arising would be a move below 211. That's nowhere close to where price is right now, so that's not super helpful. I guess the expectation would be once this 5-wave move completes to the upside, you would get a correction to the downside. And as that pattern develops, basically would expect this to be wave 1 and then wave 2. We're able to move that level closer. As is, it's pretty hard to move it any closer than it is. Essentially, you have to basically stick with it as long as downside movement proves to be counter trend moves and you don't see trendy price action to the downside. As long as that's the case, I think DG looks bullish and should be expected to continue its uptrend until it completes a larger 5th wave advance to the upside off of that 2022 low. So, Michael, I hope that's helpful. These guys were tricky, as you can see. Let me know if you have any questions or if there's anything else I can do for you. For everybody else, please come visit us at TrendLizard.com. We do this stuff every day with all the biggest markets on the planet. We look at everything, U.S. stocks, individual stocks, crypto, global markets, currencies, commodities, everything else. So come visit us at TrendLizard.com and have a wonderful evening. Take care.